Good day, and once again, welcome back to my channel. So, we are live with synthetic index. All right, so today I'm going to bring you a brief update on volatility 100. Okay, if you watch my previous videos, I was expecting a few things to transpire on the market, and fully most of them has transpired. And today I'm bringing you a live update. Yeah, so this is a live update on volatility 100, sorry. And I believe that if you are new on this channel, you are once again welcome. I want you to subscribe and wait for more updates on synthetic indices, you know. And then if you are old, I say you're once again welcome. Okay, so today let's go quickly into the chart and then I see what's transpired so far. So for those of you who have followed me for a while and you watched my previous videos on my analysis on the asset pair volatility 100, you would notice that price has really played what I expected, and the outcome is so beautiful, you know. So currently, market has really shifted course on the daily time frame. All right, market has shifted course on the daily time frame, and what are we expecting to see on the daily time frame? We see that we had a market forming this high, traded back into the range. So for instance, this is where we all started from. Okay, we had market dipping into this imbalance in here. Okay, this fair value gap in here. We had this trading a little bit below it, so it traded into this imbalance in here, this fair value gap in here. And then what happened next? Then market rallied above this high, and then it traded into this area, this red line. There is actually when price traded above this side, it was actually seeking to take liquidity resting above this high. Okay, in as much as we have taken down internal liquidity, price had to rally up higher to seek for external liquidity. Okay, so you could see clearly that there was this external liquidity above here. Okay, and then price had to take down this external liquidity. Okay, this is a swing high, so this is an external liquidity. So price took down this external liquidity. You could see the wick pierced into this high, and then it rallied back down and consolidated or accumulated more orders. And what happened next was a surge further higher. And when price surged higher, what did it do? It traded into this breaker here, and then furthermore it traded into this fair value gap resting in here. And then we happened that price broke below this consolidation, which meant that we had shifted structure. Okay, so price shifted structure in here. You could see this, the wick in here. So the wick here traded below this. All right, the wick here traded below this, and then we moved up higher. And what did price seek to do? So in as much as we have taken this lows resting in here, we have taken an external liquidity. Okay, there was a swing low in here. So from this swing high came this swing low, and then this swing high, and then back here we had broken structure right in here. And what happened next? Price had to retrace after it took down this external liquidity. Price had to retrace into an internal liquidity, which was this area. If you pull your fib, which is almost 50% of you are seeking to say that you are taking 50% of sorry, let me show you exactly what I'm trying to talk about. Sorry, let me bring the shapes. Okay, so when you pull your fib, when you pull a line from all this way to this high, from this high to this low, so from this high to this low, where is the mean, or where is the median? That's the middle. So price traded above it, which is at a premium level. And then what we see here, price broke below and then decided to seek for more external. So in as much as it was above the mean threshold of this swing in here, okay, it was above the mean, which was at a premium price. Okay, now beside it being above premium, it traded into this fair value gap in here. Okay, So all the time we look for our sales inside the premium, our long-term sales inside premium prices. So price traded here, and quickly we saw we had to hunt for reversals in here and then rally down. Okay, so beautifully that is what you saw in here. So price came into this fair value gap. It took this fair value gap down, and then we see the reversal down. Now what has price formed in here? Now you are seeing what we call the power of three. So you could see this high in here is higher than this, and then we have another candle forming in here. So we have this and this. So we are having a power of three formed in here. And as you can watch from my previous video, that anytime we have the power of three forming, we want to see the next day rally quickly down. Okay, so we are going to see what will happen here. I'm hoping that this candle doesn't come back up and close above this, which is not possible. Okay, so we are seeking for price to close this day, and then we'll hunt for our sell on the day 3. Okay, on the day 4, sorry. Beautifully. All right, and what will be our target? In as much as we have taken down this internal liquidity, our target will be this external liquidity resting here. All right, as beautiful as that. It can happen on the day 4 or day 5. All right, however, it is we are still going to hunt for that. Okay, so that is what has transpired on volatility 100 asset pair. For those of you who have been trading the asset and then you don't really know exactly what's transpiring, let me go down to the 1 hour time frame for you to see. So if you remember my previous video, I showed you that when you are on the chart, there are a few things you should look for. For instance, when you're on the daily time frame and you're moving down to hunt for sales, for instance, this is where we're looking to engage the market. Okay, inside this, sorry, let me put it well, inside this fair value gap resting in here. Okay, which happens to be that we price is still at premium inside this fair value gap in here. All right, now inside this fair value gap, let's go down to our 1 hour time frame. If you remember my time frame analysis, as I told you, so price dipped into the fair value gap in here on the 1 hour time frame, came to form this low, came up again, traded above it. You could see clearly that this is above. You could see clearly that this high in here, is above the previous high. Okay, so it means that we have a beautiful swing high formed in here. It trades down to break the structure just below this point. So quickly we know that there's a structure shift here. And what do we expect? We want to expect that price should come back up into an area of interest, and price traded up. It doesn't break this high, and then we see the breakdown. Okay, so price comes back here, and then we see price breaking down all the way down here. Is it not beautiful and so simple? So for those of you who are on my WhatsApp page, this afternoon I posted on the page about a silver bullet entry, and beautifully this is where the silver bullet entry happened. Okay, so there was this small fair value gap resting in here that, I mean, it's not so obvious for you to see that fair value gap, but there's a small fair value gap resting in here. Okay, so this is where it happened. It's here. All right, and then beautifully there's another fair value gap that happened that you could have made your entry first here. This is it. This is where the first fair value gap is. For those of you who could have seen and entered as I posted, you could have entered here. See, although price retraced, but this is where you have your protective highs and your protective stops, and you could have entered beautifully in here. Price did all that it could do in here, and then we had the breakdown. Okay, so beautifully, that is how the market works. All right, that is how the market works. So for those of you who are on the market and are struggling with your analysis, from the daily time frame I came down to the 1 hour time frame. I saw a market structure shift when we are taking down internal liquidity, and what happened next is we had a breakdown, and here we go. On the 4 hour time frame, you could see clearly same thing, price happening in here. All right, so beautifully that's what we have on the market. All right, and we could see price traded into this as an order block, price traded into severally, and then we see the breakdown, and the price continues down. All right, so where we actually hunt for ourselves is the day 4 on the candle and the day 5. So we want to see if price would retrace and close down this fair value gap. We don't know. We want to wait and see on tomorrow after 4 a.m. my time. So for instance, where will be my 4 a.m.? My 4 a.m. will be around okay, so that's where I have my 4 a.m. time. All right. So right after 4 a.m., I want to see, this is 5 a.m. Okay, so 4 a.m. would be here. So tomorrow morning my time, I want to see after this time window, I want to see price increase back, whatever swing there it may be, whatever swing it may have formed. I want to see price retrace back into either the mean threshold of the swing that it will leave. Okay, then I'll engage price inside that mean threshold. Whenever I see a structure shift inside that mean threshold, then I engage the market. All right, so beautifully, that is all there is for volatility 100. And if you can see, I've highlighted some areas, which is for those of you who are looking at the market from the market maker model. Okay, so this is the original consolidation. This area is the original consolidation. Okay, then we had the expansion to form the first accumulation, then the second phase before we have the smart money reversal happening in here. Okay, so we have the smart money reversal happening. So beautifully, we have framed all your trade entries. Now this area becomes our first area of core, you know. So we wouldn't want price, after price has broken down here, we wouldn't want price. We want to use this area as a mitigation. Okay, so we want to see price not trade above this high. Okay, so this is the mitigation now we have. So price breaks down below this area, this mitigation with the body. I'm expecting price to break below this, okay, with the body, and then this becomes the full mitigation. So we would want to see if price comes back into it, we'll still engage price because we are not expecting price to go above this mitigation area here. Okay, so for those of you who have good accounts, you can attack the market from this point of view. Okay, all right, so I'll see you in the next video. Just a quick one. If you are new to my channel, please do subscribe. If you watch my video and it's really educative, kindly give me a thumbs up, like the video for me, okay, to encourage me to do more videos. All right, I wish you all the best. See you in the next video.